It's time now for our panel to turn our attention right to the economy as it begins to reopen here. You ready to roll the dice on the casinos? Matt Malley is with us, Managing Director, Chief Market Strategist at Ameritrade and Company, founder of the Malley Report, and Tom Hayes, Chairman, Managing Member, Great Hill Capital. Tom, I'll start with you. What's your outlook? Is it the casinos you like, or is it hotels? Tell me what we need to be watching and what you think is the opportunity.
Well, Nicole, thanks for having me. I think what we're seeing here is the reopening trade actually wants to take a little bit of a breather. We're seeing rates back up a little bit after they went from 100 basis points to 175 basis points in about 7 weeks. They're now back, the 10-year yield is back to 165 basis points. And those trades that were the trades of last year, getting involved in energy, getting involved in banks, industrials, and to a lesser extent, leisure and hospitality, most of these stocks are now up 75%, 100%, 125%. And certainly animal spirits are back. You're seeing that in the private markets with Apollo buying the Venetian in Las Vegas for $6.2 billion. Blackstone bought an Australian casino company called Crown Resorts for 6.2. These are all happening in the last month. But I think what you're going to see, Nicole, is in the coming weeks, as these yields stabilize, because the market was very, very worried about those sectors that got pummeled in the last 2 months when rates rose so quickly are now going to be the new beneficiaries in the intermediate term. We certainly like the reopening trade over the next year, year and a half. In an early cycle, the reopening trade, value, cyclicals, leisure, hospitality will outperform. But what I think is going to benefit near term is the utilities, the consumer staples, and big pharma. Those stocks that have higher dividend yields than the 10-year yield are really going to start to get a bid again after getting really sold off over the last 2 months.
And Matt, what are your thoughts? I mean, you're not saying buy the dip just yet. Are you thinking there may still be some headwinds, but you like it for the longer term?
Yeah, I mean, you look at some of these things, the casino stocks in particular, they've had unbelievable runs. And one of the things I'm a little worried about is it's very similar to what we had last year. The overall market is basically priced for perfection. I mean, they're looking for an unbelievable reopening, a full reopening, a great, unbelievable unleashing of pent-up demand. The problem is we're starting to see this situation, whether it be in Brazil, where it's really bad, and in Europe, where these cases are starting to move up. And we've been saying, a lot of the experts around here have been saying, we don't have to worry about that because we have a much better distribution of the vaccine, but we're starting to see it pick up again here. This is exactly what happened last February. Now, I don't think we're going to have the same kind of problem as we had last February, but we're seeing, we see the cases around the country, at half the country are seeing cases starting to turn up. New Jersey is talking about extending, or they have extended their lockdowns. They had the lockdown that they just improved up to 25%, but the governor came out yesterday and said, we're not going to do any more relief on that lockdown up to 50% in the restaurants.
Right. What about online? Online gambling has become a big thing too. Matt, quick thought there.
Yeah, but and that's great, and that's why I like it longer term. But these stocks have had unbelievable runs. I mean, Penn Gaming, even though it's pulled back a little bit, it's still up 2,400%. I mean, that's just a huge move off the March lows. Not only that, it's 200% above its pre-pandemic highs. So, and you look at the charts on it, the RSI, the weekly RSI chart is coming off a very, very overbought level. So I just think they've priced in perfection. We're not likely to get that perfection, and therefore some of these stocks need to come down, and that's throughout the entire travel and leisure industry as well. As you see, Marriott down 6% today. They're coming to grips with the fact that it's going to be hard to reach that perfection area.
Right, Tom, you want to expand on any of that, or tell me about what about some M&A activity that may be happening, because we want to look for the opportunities here.
Yeah, well, I definitely agree with Matt. I think they have run a bit too far, too fast. If you looked at Q4 revenues for a lot of these companies like Las Vegas Sands, they were down 70% year on year, 58.5% year on year for Wynn, for MGM down 53%. So while I do think these are all going to close the year higher, I think in the back half they're going to really start to accelerate. I do agree with Matt that in the short term they're overdone. As the 10-year yield stabilizes, money's going to flow into those sectors that were hurt. Leisure and hospitality was part of the reopening trade. They've probably gotten ahead of themselves in the near term. But in the private markets, to your point, people are seeing opportunities. So we talked about the Blackstone deals. Hilton Grand Vacations bought Diamond Resorts for $1.4 billion. Dreamscape is a fund. They're putting $1 billion towards business travel hotels. What everyone says is never going to come back because of Zoom. It's absolutely going to come back. So there are opportunities in the private markets. The public markets, though, have priced this to perfection, and with yields stabilizing. You know, the last time we saw inflation break-evens, 5-year inflation break-evens get this high, 2.58% people are expecting inflation, which is more than the Fed is anticipating, was in spring of 2011. And immediately what the Fed started doing after that was they started talking about jawboning Operation Twist. And yields compressed right away because they don't want to lose control of the long end of the curve. And in that type of environment, definitely want to go with these dividend-playing stocks in the utilities, in the staples, big pharma that are down, and a value opportunity right here.
Thank you so much, Tom Hayes, Great Hill Capital, Matt Malley, Managing Director over at Miller, Tabak and Company. Thank you both. Matt and Tom, thank you very much. Great to have you on the show. I appreciate it. Midday Trade.